Hello traders, Gary Wagner here, just about 10:30 in Honolulu, 4:30 in New York on Tuesday, the 10th day of June, 2014, and this is the daily report for gold and silver. We have a nice showing in the precious metals markets pretty much across the board today, with gold currently trading up roughly $8 on the day. The high today, $12.64 and change. The low, $12.51.50. Silver, also with a nice rise today, currently trading up roughly 16 cents on the day, or 0.81% higher. The low on the day, $18.90. The high, $19.34. Current print, $19.20. More on silver towards the end of the show. Traders, want to start today's show off by looking at our daily chart. We'll look at it both in standard candlestick format as well as Japanese average. And if you recall from yesterday, it was my sense or my belief that really what we were witnessing was a consolidation in the market before moving on to higher ground. We talked about a couple of patterns forming, and when we look at the daily chart, you can really see that we had that Three River Morning Star variation coming in on this. Now, we really get that in the weekly, and I'll pull that up after we're done with our daily chart. But as you can see, the market comes down, it hits this bottom. We get these two doji-like candles, very, very much a consolidating point or a pivotal point in the marketplace. And then, of course, we got our dramatic rise that we just saw the other day, this being last week. Of course, on Monday, we had a tremendous range, but in essence, it had closed unchanged on the day. And then on today's market, we saw a nice continuation of the rally. And that rally took us to, I believe that high was 1265. We identified some real resistance in the market at around 1262. So right around that point. And you can see that right now, that area has provided some resistance. And in fact, we're trading just below it. Now, we also talked about the way the Japanese average chart was looking yesterday, and so I wanted to spend a moment and kind of revisit that right now. We talked about the fact that what we look for in terms of some sort of a pivot point or key reversal area when we're looking at these markets through the eyes of a Japanese average chart, as the market comes down, you're going to see the body size, of course, begin to wane or weaken. It's going to get smaller, and that gives us an idea that the trend we had currently been exhibiting, of course, which was a downtrend, had started to weaken. We get a pivotal candle, very, very small body, first of all. Second thing is you notice that we do get the first sign of an upper wick, which means that it is the midpoint has been traded into that area. Following day, we get this small doji candle still, but it goes green, tremendous range. Another small body, this being yesterday, even though the market was in essence unchanged, it compared it to the midpoint. And then when we look at today's, lo and behold, we have a larger body size. We still have a pretty large tail because it is quite far off of the highs, about $5 off the high. But you notice that we now have an absence of this lower wick, which takes us to viewing our weekly chart. And that's what we're doing. This is, of course, is the cash market in gold weekly chart. And here, quite easily, we can identify this Three River Morning Star. We can see that by we have the long red-bodied candle. We have a star at the bottom. And now, of course, it's only Tuesday, but already you can see that we're forming this green candle. Of course, this green candle, to have the Three River Morning Star, would have to be a little bit larger, roughly this size in here, taking it up to about 80. And if we did get something like that, we really have that classic Three River Morning Star on a weekly chart. Now, of course, when we convert this into a Japanese average chart, all we're seeing, because it's a weekly chart, is the fact that the body size is greatly diminished as compared to the last 2 weeks. So traders have gone ahead and converted this weekly chart back into a standard candlestick chart. And what we want to pay attention to right now is the various fib retracement levels that we have identified. Of course, this fib retracement is of the rally which began end of last year, beginning of this year, almost about $200, let's say. And we can quite easily see the 61%, which is 1263, is precisely where we have found some resistance. Now, I would expect this level of resistance to get taken out. My goal right now and my target for this current trade is going to be to try to get out somewhere around, call it 1288. Now, the reason for that as an upside target is as follows. Well, first of all, we have a resistance line, our 50% fib retracement is 1288. So that's the first indication. The second indication that I think is the fact that although we have a number of lows which go well into this area, meaning below 1288 when the market was trading sideways, if you look at the open to close, again, this is a weekly chart, so it's a long-term chart, but if we look at the open compared to the close, meaning the real bodies, you see that they all, except for this break here, they all happen to land above 1288. So, as I've always said, in terms of support and resistance, they are part and parcel of the same thing. One man's ceiling is another man's floor. We're looking at the same structure, one from below, one from above. So, what about silver? What are we looking for? What is our initial target on our current trade? Well, the first thing that we can say about silver is there's no doubt we did find some support, although tentative, and we don't know how long it's going to last, of course, at just at around between $18.80 and $19 per ounce. Now, our next real level is about this, it's $19.52, and you know that I've talked about that number before as a pretty critical number in silver, and that would be the area that I would feel comfortable in terms of our upside target getting out of our current trade that we got in roughly at $19 per ounce. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow on Wednesday for another daily update and review. Bye-bye.